How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is episode 21 to the Asian Session Library. Here on Thursday, the 4th, January 2024, we had another great example with the Asian Session model with US dollar versus Japanese yen. Let's walk through it together. As always, we do not trade during this time period, but we're going to utilize this time period to help us trade Asian Session. We're looking for the 15-minute swing highs and swing lows that are unbroken. So we got one here. We got another one here. And all the ones that are unbroken is where sell side liquidity is going to be residing. Got one here as well. This one is just below it. So we'll mark it off. You can see all these lows are relatively equal. And we got one here as well. That's the last one. So that's all sell side liquidity that's available going into Asian session. We have a swing high here, and it's the only buy side liquidity that we have available going into the session. As always, we do not try to jump the gun and predict which way price is going to trade. Who starts the session? It's normally retail traders. You're going to be induced into the market and they're going to be lured to the wrong side because they see market flying in one direction. They're just going to chase it outright. We don't want to be the ones chasing. We want to be the ones being critical and methodical about what we're doing. So price opens, trades down, and it looks like it wants to sell off. And I can see how retail traders could probably want to chase this to go short. But that's not what we're going to do. We're being patient and following the steps to the model. As you can see, price comes up and takes out that 15-minute swing high. So that's a purge on buy side liquidity. At this point, like I always like to do, scale down to the lower time frame and look for my entry technique. So scale down and let's look for it. So we're above the Asian open. So that's a good sign after breaking the 15-minute swing high, those late PM buy stops. And we're going to be waiting for price to print that entry technique. Now here in this example, when I was telling the channel, this looked like one at first, but the reason I did not consider this one is because this fair value gap, the high of this candle that ends the fair value gap, lines up exactly with that swing low. I want that swing low to have a fair value gap that's completely going through it. I don't want the levels to be lined up. So this is not one I would have taken because I know there might be a question about that. But as we keep playing it through, there we go. So we got the entry technique right here. So price is running through a swing low formation. And we got that fair value gap to the downside, that swing low here. And that's where we would look to go short at the discounted range of this fair value gap. So the bottom of it. So where the fair value gap ends, that's where we're going to go short. How do we do that? We go here, wait for price to return back into it. We normally just look for a classic 1-to-1. Nothing has changed here. Now, this 1-to-1 could be whatever risk parameter you want. This could be a 20 for 20. This could be a 15 for 15. But as always, I like to show the 15 for 15 because it's what I personally stick with in my trading plan. And going for this trade, you're going to be risking what? 1%, 2%. Anything beyond 2% is a bit risky unless you're really sure that this trade is going to hit. It's a bit risky. And we're going to wait for price to trade up. And now we're in short. Play it through. You can see we definitely got the 10 pips. Come down. So we got 10 pips for sure out of that setup. But we're looking for 15. So minimalistically, it's successful by getting the 10. And let's see what happens as we play it through. Price sells off and gives us the 15 and a little more. And as we keep playing it, we'll drag this out. This is that first 15-minute swing low. So like I said, we got that purge and we got to revert back down to that 15-minute swing low. Look what happens when price hits it. And as we play it through, this is going into NFP day. This is that Friday. Price completely changes direction right off of that sell side liquidity pool. So that can't be random at all. So it's really interesting to see that. Of course, it's very fascinating, but all in all, the model stands true. This is episode 21. All last two episodes as well, including this one, all occurred on NFP. And we can see that Tuesday, Wednesday, and this Thursday example was all successful. This is a answer to those that may have questions about, oh, does it work during NFP weeks? This week proved that. So not to say every single month in the first week, the Asian session model is going to be super successful. That might be something that is a part of the model potentially. I'll look into it as the year progresses. But as you can see, NFP week, the Asian session model still showed success. Peace.